at IOBM. Professor Dr. Asad Zaman is a Pakistani professor, economist, and social scientist. He is currently serving as on the Economic Advisory Committee of the Prime Minister of Pakistan and also as a member of Monetary Policy Committee of State Bank of Pakistan. Previously, he has been the Vice Chancellor of the Pakistan Institute of Development Economics, Islamabad, and he also has been the Director General of International Institute of Islamic Economics. He has a PhD in economics from Stanford University from 1978, MS in statistics from Stanford University in 1976, and he has also a background of mathematics in BS in mathematics from MIT in 1974. So he has a very strong background and has also been a member of the State Bank of Pakistan's Monetary Policy Committee. So Dr. Zaman has extensive experience in many various fields of, including in social sciences and economics. So we welcome Professor Dr. Asad Zaman. Please address our audience.
Bismillah ar-Rahman ar-Rahim. Can you hear me?
Ji, ji.
Okay, okay. All right. So my talk is related to actually very closely to Dr. Ayub's talk. Mr. Muhammad, he's a doctor now. He's gotten a PhD recently in this. And it complements his talk in many ways. I'm going to share screen so that I can present my slides. Let's see how do we do it. Share the share screen window. Share.
It is visible. Ji.
Okay, good. So I'm going to talk about a new vision for Islamic banking. I won't mention specifically COVID and small and medium enterprises, but they are very closely involved. In the COVID, post-COVID era, we have seen massive amounts of injections by money and massive rise in global deficits throughout the world. And this has made clear one very essential point of modern monetary theory, and that is that money is a creation of the state. It is not the standard wisdom, which is very deeply embedded into the ways of thinking of both economists and the government, is that first you must raise money by uh, taxation, and then you can spend it. This is completely wrong according to modern monetary theory. Money comes to existence by fiat, by sovereign authority, and once money comes into existence, you can tax it for various purposes, one of which is to cut down aggregate demand in order to reduce inflation. I don't have time to discuss all of these complicated issues. I want to just discuss the relevance to Islamic banking. So, start by traditional Islamic economics topic that there are well-known evils of interest discussed by Mufti Shafi in Masala Sood. And although there are many, the key problem is that it concentrates wealth and power in the hands of a few. And this is contrary to Islamic principles. What happens next is that the wealthy and powerful transform the system to favor themselves. And this is the process of financialization, which you have seen starting from the Reagan-Thatcher era. And so how do they transform the system? One of the most powerful tools to achieve this transformation is shaping of minds by education, and in particular by economics. Economic theory is one of the major tools that is used to shape minds, to get them to agree to very bizarre and biased system. So there is a very long and complex background history, which I have covered in many different papers, but it is useful to go through this briefly because we all share a common mindset and we must break out of this mindset in order to be able to see the alternatives. So there was an industrial revolution in Europe, Britain. It massively increased productive capacity and the Christianity was rejected by Europeans for complex reasons. So they had no rules and regulations to control consumption, and they had no heaven to look forward to in the afterlife. So basically, the focus shifted to creation of heaven on earth, and so a switch from Christian values to a consumer society. Christian values have reject greed and pursuit of wealth and power and luxury, and they ask for simple living and responsible consumption. All of this was abandoned, and the opposite values, the pursuit of wealth and power, became the norm. And this is what we are living with, where the firms pursue profits as their goal. So this great transformation, which has been mentioned in many books, the main uh, ideas of this was that the goal of life became the maximization of pleasure on this earth. And this is actually an economic axiom, that rational behavior just consists of maximizing pleasure. This is actually an antithesis to uh, Islamic values. Uh, from this goal, we get from cooperation to competition, from generosity to selfishness, from social responsibility to pursuit of pleasure for the individual. So all of these changes took place as part of a society in which production became valued for its own sake, wealth and pleasure and power became desirable in this life. So one of the key questions that economics, you see, economics is really a branch of moral philosophy. And one of the key questions of economics is, what should we do with when we have more wealth than we can use? So the traditional answer in all societies, other than the modern capitalist one, has been to spend it on those who have need. So the modern answer is that we should just use it to get more wealth, which doesn't really make sense, in the sense that you already have more than what you need. So why should you get even more? But this is the answer that is widely accepted and implemented and part of the ways of thinking. So in Islam, we have five levels of spending, and we are not in Islam doesn't teach us austerity monasticism. It says that you can fulfill your needs and your complementary needs and do beautification, but don't do israf and tabzir. This is not in line with current economics, which says you should maximize your consumption. So the key argument that economics makes, all of the arguments are really moral arguments. And I don't have time to cover that because my goal is elsewhere. But one of the key arguments is that the wage is the marginal product of labor and the interest rate is the marginal product of capital. This basically justifies payments to capital. Now, this argument is wrong, and it's very obviously wrong because it only holds when you have a Cobb-Douglas production function. If you try to work this argument in a constant production, it breaks down, but nobody notices this. So this fundamental flaws in economic theory are ignored because economic theory is really part of propaganda to assert the right of capitalists to earn profits on their money. But okay, this is just a peripheral issue, and I want to get to the central issue. So basically, the profit maximization theory of the firm is very firmly embedded in minds, and people say that this is the goal of the firm. This goal is the arguments for profit maximization have been shown to be wrong by many arguments. One of them is from evolutionary economics, and the other is from principal agent models. And the profit maximization by financial sector has routinely led to financial crisis, more than 300 since the Reagan-Thatcher era. And a very brief history is that the Great Depression in the USA, which was caused by financial sector going wild in terms of creation of money, this led to regulation, which created prosperity in the West for 50 years. And then in the 1980s, the Reagan-Thatcher started deregulation and ultimately led to the repeal of the Glass-Steagall Act in 1999. And that led very quickly to the global financial crisis. So Basically, in a nutshell, what I'm trying to say is that profit maximization by banks and by financial institutions was prohibited after the Great Depression, and that led to prosperity. This prohibition was repealed, and that led to crises after crises after crises. So the key deception in economic theory has been hiding the role of money, and in particular, the role of money creation. And so there have been many eras in global finance, which uh, has evolved over the 20th century, from gold standard to a interregnum period where there was fiat currency, then there was Bretton Woods, which tied the gold to the dollar, and then the Nixon shock, which removed the gold backing and basically led to the era of floating currencies. Now, the characteristics of floating currencies are radically different from the gold standard or even the dollar standard, which was 1971. And basically, modern monetary theory deals with the floating exchange rate, where money is not tied to anything in particular. And on the face of the rupee, seen that the government will pay the owner of this note 1 rupee, which is sort of a meaningless thing to say in floating currency era. All right, so the key questions to ask is, who creates money? How is money created? And what are the effects of money creation? These are questions which are not studied in economics, because economic theory tells us that money is neutral, money doesn't matter. Basically, economic theory teaches us how to deal with the barter economy, and does not, even the real business cycle models don't have any money in them. And basically, we are living in a monetary economy, and money is everything. But macro models mostly treat money as nothing, or neutral in the short and the long run. So these questions simply get ignored, and nobody knows the answers. Uh, so there are two major flaws in the current financial system, going over some uh, basic, skipping a lot of details. There are two basic flaws. One of them is the interest-based system, and this has been uh, very critically examined by Asif Mia and Mia and Sufi in their House of Debt, in which they have shown that the global financial crisis was really due to the interest-based mortgage. And if the mortgages in the market in the USA had been on musharka basis, this would not have happened. And they outlined the system. So basically, one of the major flaws is the interest system, and the Islamic economists have been mostly concerned with replacing interest. But the other major flaw is the private creation of money, that banks actually create money. And this has been dealt with in the West, in the Chicago plan, and in the more recent Iceland plan. uh, Try to prevent banks from creating money and transfer this power to the state. Now, actually, one of the major lacuna, major gaps in the Islamic economic theory is that we have considered elimination of interest, but we have not considered the elimination of private creation of money. This is very important. We have to consider both of these things together in order to arrive at a genuine Islamic system. Now, the Bank of England paper entitled Money Creation in the Modern Economy, which is very recent, just a few years ago, shows that in fact private banks create money, basically admitting for the first time that something which textbooks that I read used to deny. And this paper also shows that if we transfer money creation to the government, take it out of the private sector, that is very useful. Modern monetary theory makes the same recommendation, that power of money creation should be taken away from private banks and given to the state. And that is the Western solution to the problem of private money creation. This is what the Chicago plan and the Iceland plan says. However, this plan would no longer work, not in the West and nor in the East. The reason is that the state in the has been taken over by financial capital, and this is something I said earlier, that when you have wealth and power, you use it to transform the rules to make it even more favorable to you. And this has happened, and you can see, if you look at the number of people who own 50% of the global wealth, um, you find that this has been shrinking. It used to be 300 10 years ago, and now it's down to 60 or something like that. And every year, the number of people who own half of the wealth of the world goes down. You could put all of them in a bus, And these people own half of the world's wealth. So, how does this happen? Well, this is because financial institutions create money. In the advanced economy, it's in 1 to 20. I mean, the state creates 1 rupee and the uh, private sector creates 20. In Pakistan, it's not that bad. Money creation is about 2 to 1. Two units are created by the state and only one by the private sector. But private money creation is a problem because private banks invest in profitable investments, and these turn out to be usually real estate, stocks, non-productive. Basically, the concept of the rentier, the person who earns money without doing anything useful, has been eliminated from economics, but this is very much there. And so, if people earn money without doing any productive work, this causes harm to the economy. So, privately beneficial investments are not socially beneficial, and socially beneficial investments do not get made. And so, that is a problem with the current system. So now I come to the main point of my talk, which is that we have a genuinely new Islamic alternative which is possible, and which is to transfer the power of money creation to Islamic banks, but change the Islamic banking goals to socially beneficial projects. In this, uh, this means that we give up the profit maximization goals, and we say that the goals of Islamic banking should be maximization of social benefits to society. When this is reconceptualization is done, then Islamic banks would become development partners of the state. And this idea has a lot of important applications and implications, including SMEs, financing, etc. So I would like to just turn to some concrete details, specific projects. In the USA, the 30-year mortgage revolutionized US finance. How was this done? Well, there was this organization called Fannie Mae, which the government put up to allow banks to take long-term risk on these houses. And that is what permitted the creation of the 30-year mortgage, and that was a hugely important development. Now, from the Islamic point of view, we could give, instead of financing construction of houses, we could finance construction of human capital. And so we could, this is genuinely, and if we take a child and we say, okay, the bank will take him to 20 years and give him housing, give him food, clothing, education, and all things necessary to turn him into a productive human being. This is a massively valuable investment. Today, this is happening in the US, where the students are taking $1 trillion plus of loans for their higher education, so that they're basically enslaved by the finance. Now, in Musharka projects, you don't enslave the people; you develop partnership with them. So basically, we could do a widespread financing of human beings but the 20-year period makes it very highly risky and introduces a lot of individual risk. So this would have to be supported by government initiative, just like the 30-year mortgage was supported by government initiative in the USA. Similarly, in housing, in building infrastructure streams, in projects which create employment and skills, there is a huge possibility. These possibilities don't generate too much private return, but they create huge amounts of social return. And that's why private banks do not do these projects, but Islamic banks could, if they are treated as development partners, which would involve the government giving them loans at 0%, and they are advancing these loans to needed places at 0%. Ways of earning revenue for the Islamic banks would be radically different from interest, and that is of course, the main goal of Islamic banking. That you can't earn money by lending money. You have to do it by engaging in real world activities and doing something productive. And there are many things that Islamic banks can do. So I'm coming to the end of the talk. What are the advantages of Islamic finance over conventional finance? Well, basically, what are the advantages of Islamic finance over state finance? Well, basically, the state has very limited amount of capacity. If you allow the state to create money, they can take undertake large projects, but these tend to be hugely wasteful because the state does not have capacity to manage and run large projects. And so a lot of corruption leakages take place. As opposed to this, if you transfer this power to Islamic banks, private institutions, you create a lot of different engines of change. Um, One more thing that the private sector can do much more effectively than the state is monitoring and evaluation of projects. The state does not do well at this because often the projects that are funded are politically motivated, and then there's no incentive to monitor and evaluate them because you run into political trouble. As opposed to this, if you devolve this power of money creation to Islamic banks, then the monitoring and evaluation will get built into the private sector and will be free from political pressure. We can then fund communities and for community development projects, and basically this will lead to energizing of communities, which are the central drivers of change in the Islamic vision of the world, that it is the neighborhoods and communities which drive development. And so this will create thousands of engines of growth, whereas the state itself is very limited and cannot. So that's why this is the new vision of Islamic bankings. The goal of the Islamic banks should be to maximize social benefits. Instead of profit maximization, they should run with a satisficing goal that make sure that you have enough money to run the institution, give good salaries to your employees, and generally speaking, allow for uh, the necessary return, but don't maximize return on investment, which is the standard banking. This will create social capital and it will create a community oriented banking, which is very much in the spirit of the Mit Ghamr, which was first introduced by Ahmed al Najjar in 1963. This model was unfortunately shut down because of politics, but this was a very good model, but it needs to be updated in light of today's situations. So, the benefits of Islamic Bank over modern monetary theory is that it can lead to three-way partnership. We have the government at the back, then we have the private sector, the banks, which is finance. We can also have private sector doing monitoring and evaluation, and then we can have communities, the stakeholders, the owners of the projects, the ones who get beneficiaries. They can also participate. And okay, so that's it. I have that's the last slide. So I will end it here. There are lots of details that I have omitted because of brevity, for the in the interest of keeping time short. So I'll stop here. Thank you.
And that was very detailed, comprehensive, and well informed presentation on economics and Islamic economics. Thank you, Dr. Asad Zaman. And we are very grateful for your